Financial statements are the method that a company communicates accounting information. The transactions that have occurred during the accounting period are summarized and reported in these financial statements. In this demonstration, we will look at how to prepare the single-step income statement, the retained earnings statement, and the balance sheet. We will use Ross Auto Service account balances for the year ended December 31st, X4, to prepare these financial statements. Please note that the retained earnings in the data field is for the beginning of the year. This company provides parking and minor repair service at the local airport while customers are away on trips. There is an order of preparation since we first need to determine how profitable the company was. We will develop the income statement first. Please always make sure that you set the title of the statements correctly. For the income statement, the first line is going to be the name of the company. The second line is the name of the statement. And the third line is the accounting period. For the income statement and the retained earnings statement, it's for the year ended. It's talking about the total accounting period. The balance sheet is saying specifically what do we have on hand at that specific last day of the accounting period. We are going to develop the single step income statements. We want to identify the revenue accounts first. So we look over here for our revenue accounts and we identify that we have 3 revenue accounts. Sales revenue from parking and also from repair are revenue accounts that are resulting from the selling of services in the operation of the business. Interest income, though, is generated from non-operating activity of investing. We then have our expense section. This is our cost of resources used to earn revenues during a period. As you can see, I've listed these expenses in order of magnitude, largest to smallest. I then subtotaled my revenue and my expenses, and to compute net income I subtract the expenses from the revenue, and this gives me my net income. We can see that my revenue exceeded my expenses, so I have net income. But if expenses had exceeded my expenses, then my title would have been net loss. After the income statements are prepared, we are ready for the retained earnings statement. Think about this title. The statement is explaining to the reader what earnings are still retained in the business. We should start with the beginning retained earnings. Then we need to add what was earned during the accounting period, our net income, and if there had been a net loss, we would have been subtracting it. We then go ahead and subtract what was given to the shareholders, and this is called dividends. This will give us retained earnings, which will be brought down into the balance sheet in the stockholders and equity section, and we can see this amount being shown in retained earnings here. We are now ready to develop the balance sheet, which is the proof of the fundamental accounting equation, which is assets equal liabilities plus stockholders' equity. This statement reports the financial position of the company for a specific time period, in this case December 31st, X4. Assets are the first section. They include resources with economic value with the expectation that it will provide future benefits. A classified balance sheet has subgroups. The major components of the balance sheet to provide more useful information to the reader. For this demonstration, the first subsection is the current asset section, which includes cash and all other assets that are expected to be converted into cash within 1 year or the operating cycle, whichever is longer. The current assets are listed in liquidity, which is nearness to cash. How long will the assets other than cash be turned into cash? As you can see, the current asset section is listed with cash listed first. Then we have accounts receivable, which is what the customers owe the company. Next we have inventory, and that is what the company owns but is available to sell to customers. Prepaid rent is an asset because the company has paid the rent in advance. Prepaid rent has a future benefit. As the time expires, this rent will be matched in the accounting period it is being used for, and the prepaid rent will move off the balance sheet and recognized as rent expense up in the income statement. There are two non-current assets for this company. Investments, which shows an asset in an investment which will not turn into cash in 1 year or the operating cycle. It will be longer. The company owns equipment, which is a long-lived asset used in the operations to produce revenue and shows up under the asset section, property, plant, and equipment. Please note that as the equipment is being used over the years, we must allocate the cost of the asset being used up. The process is called depreciation. And the used up portion of depreciation is shown up in the income statement. And the total amount of the depreciation is shown here in accumulated depreciation, which is a contra asset account that offsets the asset it is depreciating. And it determines the carrying value or book value of the equipment. We subtracted the accumulated depreciation from the equipment. We need to now subtotal each one of the subsections, being the total current assets, the investments, and the property, plant, and equipment to come up with our total assets. Our next area is our liabilities. Liabilities are claims of the creditors, which are the debts of the company. Under the classified balance sheet, we have our current liabilities that include obligations that will be paid within 1 year or the operating cycle. They are usually listed in the order that they will be paid. You should note that we also have long-term liabilities, and these are obligations of the company that will require payment in more than 1 year of the operating cycle. You will see that all the liability accounts in this example have the word payable, which shows that the company owes this amount to another. The stockholders' equity section is made up of our claims of the owners. We have the contributed capital, which includes our common stock, which represents what the owners have invested in the company. We have our retained earnings, which is the accumulated net income of the company that was not distributed to owners. We should subtotal these subsections for total liabilities to come up with total liabilities, and our stockholders' equity to come up with our total of liabilities and stockholders' equity. Make sure you review the balance sheet and verify that our assets equal our total liabilities plus stockholders' equity. If it is not in balance, you should try to find where you've made an error and make sure that you have picked up the correct amounts and or have categorized all your accounts correctly. Please remember that your statements have a relationship to each other. In accounting, we use the term articulated. As we go, we see that our net income flows onto our retained earnings statement, and from the retained earnings statement we know that ending retained earnings goes onto the balance sheet. You should be able to identify the different types of accounts and use the account information to develop the financial statements. It is important to practice what you've learned, since application will be the key to your learning process. Accounting is a building block, so it is important to understand the financial statements as we build on these concepts.